All right, what's going on, folks? So there's a chart out there that is making the rounds. I will be posting this on Instagram as well, so you can take a look at it. And it gets into basically it shows two lines. It's a line graph, and it shows two lines. One is the number of home buyers in the market, and how, and it even entitles the graph. Number of home buyers in market falls to record low. And the chart shows just how low it is. It's extremely low. I mean, we're talking down to COVID level lows back in 2020 when nobody was shopping for a home because they were in lockdown. They couldn't even leave their house. So where the number of sellers, the other line is the number of sellers, is at a pretty high number. And the gap between how many active sellers there are, so, homes for sale basically, and how many buyers, active buyers, right? That gap is the widest gap we've seen since around 2014, maybe 2015, if I eye the graph correctly. So what we're saying is there are way more sellers than buyers. And that, as the chart is trying to indicate, is a potential cause for concern. Right, because it's a demand collapse at the end of the day. I mean, there's a serious collapse in demand from potential home buyers. These are national numbers. Of course, this is the United States, national numbers. And we know that. We know there's rising interest rates, although interest rates have remained pretty much, I'd say, flat here, maybe dipped a little bit. But they're high. They're high compared to the past. And we know that sellers have been returning to the market. They finally waited. And they've their life things happen. Baby boomers passing away, causing homes to be put on the market. People need a change. They waited long enough, and now they do need to sell. So we got a situation where you look at that chart and it's spread all over the place, and you think, oh man, we're going to crash here, right? Housing market has to crash based on these numbers. But if you look at it, we've seen this gap before. We saw it, as I mentioned, back in 2014, 2015. And you know what happens when the gap gets that large every time? It closes. That's right. It just closes. I mean, it doesn't mean we collapse further. It closes. And what we end up seeing is, well, essentially the lines get closer together again, and the number of buyers and sellers are matched up, and at the end of the day, the market normalizes. We saw a tremendous gap in the past between the number of buyers being way more than the number of sellers back in 2021 and 2022, and that gap eventually closed in late 2022 and normalized, and then stayed that way for a year. So I think the whole, again, it's a potential, it gets clicks, right? You put out a graph like this, you talk about, the doom and gloom scenario, and this graph came from Redfin, and it's real data. It's real data. It's not that it's not real data. It's just, sometimes these things come out and they're meant to scare. When in reality, I don't think they need to be scary. I want to take the contrarian view and say, look, we've seen these gaps before. They always close up. And, if anything, it's a signal to me that we're almost in a bottoming process here when it comes to housing, that it should start to turn around in the coming months. It's an affordability issue, and it always has been. So, yes, do interest rates need to fall further to create better affordability? Absolutely. Could prices fall further? Absolutely. Will they fall much further from here? Look, I think they've normalized, in general. So I don't think you have to be on the lookout. Also, as far as the number of sellers are concerned, it's not astronomically high like it was back in, say even 2008, 2009. It's just higher, but it's still actually historically lower than the average too. So I don't feel like we're going to face this inventory situation, right? Where, oh my gosh, the inventory is so high and it's collapsing the market. That doesn't look like it's happening either. Okay. This is a national number. We have to take note that every area is different. If I were to talk about South Florida, Miami-Dade County, Palm Beach, Broward, where I, am most familiar with and where I actually reside, I can tell you it's not that, it's not, I want to say it's not a normal market, but it's not a typical market. There's international buyers, cash heavy international buyers, and they're coming in and they're buying properties down here, which that skews the demand or the look of the demand, right? There's a migration going on from places like New York and California and the Midwest, even Indiana, Ohio, and they're coming in Illinois, and they're coming into Florida, and they're migrating to Florida. That again increases demand. So that is a unique situation. When you count that with no state income tax and just people wanting a different lifestyle or weather or whatever it may be, or they're moving here, so they're creating demand. So the situation in South Florida can look much different. But you even, again, as I've mentioned in previous shows, you can't just look at the local market from that perspective and what the dynamic is. You have to look at even the type of property and how it's being affected. You have to look at condos. Is that different than single family homes in South Florida? Absolutely it is. HOA fees are going up. I've mentioned this previously. Insurance costs are going up. New regulations for buildings and things like that. So, condos are suffering in South Florida. They're down. They're down probably anywhere from 10 to 20% in some cases. Single family homes, though, a different type of property, are not doing that poorly, right? Supply is limited with single family homes in a place like South Florida, and so you don't have that HOA exposure. Yeah, you have rising insurance costs, but you don't have rising HOA fees with a single family home. So when I look at the single family home market in South Florida, I see more of a flatline situation. I don't see I don't even see barely any price drops, to be honest. Maybe in asking prices, I see those perhaps dropping, but I don't see necessarily the overall median average coming down. So again, I take the contrarian view when I see a chart like this. It tells me we're probably closer to forming a bottoming process in the housing market, and all we need is lower interest rates, and all of this will change. Demand will come back, price will stabilize, and eventually make its way back up. And I don't see why this can't happen in, honestly, the next 6 to 12 months. I think that we are going to get into a little bit more of an aggressive rate cutting cycle at some point. I have to believe it could even be as early as the second half of this year, maybe early 2027, at which point, we could see the dynamic shift. And let me tell you, when it shifts, it can shift very, very quickly. That is it for me today. Thank you so much for listening to today's show. And as always, if you have questions or need specific advice, ideas, or just some help regarding your particular real estate needs or situation, or if you're just looking to buy or sell real estate in Florida, well then DM me on Instagram at The Salib Group, or just send me an email to mark@thesalibgroup.com. Don't forget to leave a rating for the show, follow, subscribe, help others find the show, and be informed and educated about the real estate market just like you. Until next time.